Hello and welcome as today's date comes in that of Thursday, the 16th day of July 2020. My name is Derek and this is the Money Charts channel. All bets, trades of the like within each his own risk and their own reward. One of the charts that I've been enjoying looking at the last several days has been the XAG CAD or silver crossed against the Canadian fiat currency. Currently in at $26 on the Canadian side. And reaching levels, the highest levels from last year, retest of the previous point. The more solid level of resistance we've established from that level has really been around 24. And it bypassed that just about a little over a week ago. Nicely done. As we can see here, the excitation of the 18 average of highs was on July the 6th. It continued and has been doing nothing but continuing well. Last couple of days having a very low bit of sideways consolidation lower than this key Fibonacci line that I put in quite some time ago. We can see excitation here on the 3-day chart. On the weekly term time frame, this just shows me how wild this failed move really is. Because as this thing was before, it was a situation where it was supporting nicely at the 19 and a third handle. And then having a great not so pierce below. I mean, usually these things, at least I've been saying within the cryptos more times than not, piercing extra. Well, this is a pierce less, and it's Canadian dollar and all that stuff. But as it goes, we have almost supporting where we came from here, but definitely supporting where we came from in this area with this level. But keeping the uptrend active. Oh no. So yeah, it was. See, we were in an uptrend, but the whole Rudy Gobert lows and. It's almost as if it didn't happen, and then trying to buy at those prices, yeah, as if. Although it was still cheaper to buy then than it has been now, as the prices did not resist this area in here, and it didn't resist that well, or it resisted very small, weak resistance, as I like to call it, the last year or two. At, of course, previous resistance at 24 height change, supporting really this resistance area here. And now that it's had this clear break, this is going to be very interesting. Yeah, maybe it might come back and we might find some key support here at 24, and that's all productive and everything. We'll be finding support at the 18 average of lows. But the possibility of a significant break in here just becomes so active. As we look at this on the monthly term, just a beautiful up move, single leg higher, and a very good single leg higher at that. In the 2009, 2010, 2011 run, as it went up from the, and there's a little bit of another little bit, same sort of deal in here. Like, why did this market fall like that? Oh yeah, the 2018 stock market, yada stuff. And then it rebounded quickly, came in here and then, up. Similar things here. I'm really thinking of moving in. So the down move here was the current situation 19 event. Although I don't remember what happened in the previous 18. And I realistically, sarcastically mean that when I say that. Because I really don't understand what the 1-9 means, and it's what when the stuff like Friday the 13th or Nightmare on Elm Street was on, like, collectively they were like 20 parts. I remember a whole bunch of the first 20 on those ones. Anyway, when it consolidated at this previous level in here, which is, well, it's not doing that now. It's this up move is comparable to this. Well, consolidated here and here. So, but when it got above this resistance, that was a very large break. And this is the Canadian dollar chart. So if it's not, it's all going to be looked at with the American. So let's just take a look at that. And I can do so within the SI. There we have it. So same sort of deal here. It's the exact same thing. It just means that it's got a much deeper retracement mode. And the next level, there's really only two key levels on this term time frame, which is the monthly chart for where I see resistance area. One is around the high $28, 28 to 31, 32. 28 to 33 is the first level. And then we would be looking at between 42 to 50 as the next key level. And really even higher than that, 55, 56. Piercing extra, basically. But this whole general area from where the chart action was, which we'll even see more when we look at the quarterly. But for now, from the point when you asked me what all but what silver was here back at this point, well, I would have known it was a metal. I kind of like, I guess I might have been able to tell you it's pretty cool. I mean, you gave me a silver coin, I probably would have been amazed by it, but especially, but that's even bad for me to say, or a difficult reality to say, in the sense that I've always been person to believe in, I guess you call it hard money, or just really owning your own money, having it. You don't own it if you don't own it, if you don't hold it. You don't own it if you don't hold it, kind of. Yeah, that's what they always say. And it's always been that way for me. I can always look back at my pictures of my old birthday and Christmas photos where I remember people would give me $5 or $20 cash, and well, now that's not going to the bank type of thinking is the way it always was with me. I would rather have it in my wallet, know where it is, know how much I have, try to increase its numbers to the effective level. And when I go to stores, well, back then, not like kids were writing checks, but that's what you would do when I was a kid, when you wanted to not pay cash. And I guess there was credit cards, but the credit cards, it was a little machine, a sliding machine that they used to use back in the 1980s. With that being said, that's just how I grew up to have the cash. Then the Interact system, as they called it in Canada, or debit cards where you would pay through your bank card. Yeah, it was a little convenient, but I would still always rather have the cash. And the fact that I didn't understand gold and silver as money, well, I feel frustrated. The fact that through the time in, well, where should we start it? I guess we'll go from here. When I did a lot of accounting schoolwork, I guess I should have learned stuff like that really from grade 12 on. I took accounting in grade 10, 11, 12, 13, and then again into college. And not in grade 10 or 11 would I expect to learn about gold and silver there. That is too early education. Although it should be talked about in school, but never was. But they never taught us how a company who has their assets in gold and silver bullion, how they track it. I have a good idea how I think I would. And to a degree, they kind of did. Really, and even for that, they didn't teach it too much. It's just as far as holding assets that you buy that has value change. I mean, they talked a little bit about that. But they never mentioned much about gold and silver at all, and even the stock market for investing purposes. I mean, a little bit for your own company stocks, and they got a lot into that to a degree, and they should have. And that started in, I think, grade 12, and that was a good time to start that. It was hard. I was very frustrated learning that in 12 because I didn't get it. That I did later. But stuff with like the common shares companies had, but never ever talking about what to do about gold and silver. And that's the way people are. They just don't get that idea. It doesn't get inflicted to them. Who's going to talk to them about that kind of stuff? And yeah, it's talked a bit more now. But I mean, what investment it would have been to, of course, be part of it at these earlier stages. But even at the same point, when you talk about what grade of investment it would have been, well, I didn't want to draw that line. I just wanted to take this and just scroll this like that. Yeah. Back in here, you're like, oh, okay, this is like silver was manipulated. It's going up. And even in here, if you were saying, okay, silver's like $4 and change, that's just way too low. And then the setup would have been perfect for you. There's an attempt to get above it here. But what do we see from that? It falls back down. Okay, but it supports where we want it to. Okay, maybe it gets above, but we're still playing this resistance. No, and we're still playing the support. But what do we got here? We got lower highs and higher lows and higher lows. Symmetrical's got to break it at some point, obviously. And well, let's just see. Well, now we're showing some strength at the highs, and there's a situation in here at that point that was a statement that it's attempting to at least retest this and potentially break it. And there we can say, oh, it looks probable that it's going to do that. And there, well, now we're at the stage at this point, and this is like what gold's doing, just retesting that previous level, taking some time, and then it gets to it, and that's what gold will be doing soon. As we can see at this point, it was making new highs. Oh, what do we do at new highs? We do that. That's what we do. So within its correction, you could have been saying back in 1982 that the price has been damn cheap, and then you're going to have to wait over 20 years. And that's just the way it was. Now, how much was stated in the world facts for the schools not to teach this kind of stuff? Because, I mean, accounting is just one of many different classes that should be damn pissed off that wasn't learned, that wasn't taught. Yeah, my grammar wasn't the greatest, but I didn't minor in communications that well. No, yeah. If you predict my grades to be pretty poor in that, I passed. Yes, you're right. However, economics classes, any type of investing, and I'm curious about the real investing classes, how much they even really did talk about the gold and silver markets, because I think it would have been very little, to say the least. Well, as it goes here, silver futures looks to me like it's going to be having a very good break as we continue on forward. On the monthly chart, this is only the second time since back in here, since for the bull market, or since the bear market started, that the price has even gotten above the 18 average of highs. Okay, maybe technically here it did, but not really. But this is the first time ever it's attempting to end the trend, because it never got above. It got up to the 18 average of highs while it was declining on the highs and lows. Then it got to the highs here as it was neutral 4 or 5 quarters ago. Now it's getting above it as it's been consolidating to this high, as the 18 average of lows are starting to rise, as is the 18 average of highs. So this is really giving me the indicator, okay, yeah, that's just, how is this thing going? Because that's one thing I want to look for with this. Whenever this is has had declining mode, how is it attempting to get above? And this is, to me, showing that of a real serious threat. On the daily chart, this has been just a beautiful run. It has gotten above this key level of 18.5 in here, which really is now just back. Okay, so where do we get to after this? Oh, yeah, previous high in here. So it's a retest of this mark. And as it goes, and before that, so we got this high here, 21 low change. That's next short-term key level of resistance. Let's look at gold next. G1 is what we look for that, or GC1. $1,806. And just to look at this, just for, even. This is, the ratio here is pretty much spot on. Silver, we have a differential of about 30 some odd cents. That's about 1.5%. Because before, like months and months ago, if you were to divide the GC1 and the gold futures, this was like a percent and a half lower, and silver was pretty much fine. And then all of a sudden, this one started to slowly correct better, but keyword slowly. And then this one got out of hand, and now it's not as bad. But anyway, gold chart on the daily. A lot of this correctionary move as it got up to this previous high on April the 14th on that day. And several support tests below the lows, but pretty much at about 1683. Not as many, but still resisting conservative or constructively. 1755 betweening... and then 1771 was a pierce below this one. But it congested this area from June 23rd to like June 29th. And it really kind of still is, but now it's supporting I mean, what's going on with the support? It's barely going down much at all. Very low volatility within this leg run higher, supporting the 18 average of highs, albeit starting to lose a little bit momentum, but really not much at all. Really. And these longer term charts are just a flying. Monthly chart getting above this key level of key resistance, and I guess I want to show where my Fibonacci lines are, because to me they're very important. And we'll get back to the other one in a bit. But this was obviously this resistance level accepted. It's begging how big it was. I don't want to make a new word for that, like excitation. I made myself and whatever. So this one here, yeah, it resisted it, but not as much as that, all that much as this, but that was hard to do it more, even as much or near as much. Comes up to it, resists this level, and then what a beautiful period on the month of March as far as its chart concerning. It retested for one more month, especially because you see in the month of February it pulled back, because we can see it closed at like 1580-ish area. So we know it went from 1587 up to the 1779, pulled back, well piercing below the Fibonacci and matching the previous support that it had before, but quickly getting it back, getting above it, supporting it last month. And this month we're halfway through, not so volatile as we can say, in continuation of what's been going on, which is a retest of the previous high from 2011, 2012 area. And it is as it is for that. It's looking pretty damn good, I think, anyway. And the possibilities of this breaking to monster levels is high. And that's why I've been stating like weeks and weeks and weeks ago, I think this is last call to buy your gold and silver. I truly, truly believe it. I'm going to show the monthly and yearly charts to finish off this video. Or quarterly, sorry. Quarterly. I've already done the monthly. Actually, no. I'm going to go back and do the monthly from back then. Then I'm going to go. And I'm even going to go weekly from back then. Because I missed. And I didn't plan on doing this. Although I did plan on talking about gold and silver. And I did plan on doing the whole. Talking about its previous. How key its previous levels were. But not looking at where it would have been back then for either gold and silver. But back then, I don't got before 75, but what happened here was, and I think it was December, end of December of one of those years, probably 74. So yeah, probably would have been at this point. Gold was at $35 basically at 68.71, and it rallied up to this point. But it was illegal for Americans, and I don't know about other countries, but I should know, but I don't. I should, but it was. I don't think it was illegal for Canadians. I would think no. But for the Americans, it was. My excuse was, hey, I didn't know, and quite frankly, I wasn't born back before this. And I wasn't even born on the open here. So that's my excuse. With that being said, they then made it legal for you to buy it. Oh, kerplunk. So they basically gave you a 50% price reduction. And this reduction was a significant higher low to the $35 levels that it was before. Now we have retracement mode to here. And I made a whole bunch of videos about this way back in the day. So I have covered this years and years ago. But with that being said, it constructively came to this point. And when it broke, significant move. I mean, that's just the way it goes. And to this point, this was the high. And this was a situation where if they wanted to, they could have pegged the dollar back to gold and silver, as was written in the books by Mike Maloney. Hidden Secrets of Money, his video channel, and the guide to buying gold and silver. I got one of his copies way back when. I got one of them. I mean, way back when, before this high. We're probably back in here. I got it. So back to the quarterly and the yearly time frame. This thing is in a very beautiful breakout stage, and I do love the yearly term. Will they let me show it still? Yes, they do. I wasn't sure about that because I think you need the next basic package to do it, but hey, I can still do it. This is exitation of the 18 average of highs after it. Last time it did it was here. It established a key level of resistance never seen before, supporting successfully through that of about 6 years. And this is the year it's leaving it. Thank you for tuning in. Have yourself a great day. Bye-bye.